We'll see if anyone comes. Okay, I do see some people.
Okay, cool.
So we're just gonna kick off, and then if we're recording this, and so if people join late, we'll make sure we'll send over the recording to you so that you can distribute it to everyone who's registered for the webinar. But we are kind of doing a last minute coverage for our tax and financial planning updates for US citizens living abroad. Agreed to do this a couple hours ago. So thank you for being gracious with us as we go through this presentation. It's Otto and I's first time doing this presentation together. But we have lots of great information for you today. So hopefully you'll learn something. We'll start very quickly with a disclaimer for Democrats Abroad. So this is hosted by Democrats Abroad. Otto and I are not compensated. Thank you so much for your donations to this organization. Democrats Abroad cannot provide individual tax advice. Advice requires consideration of your individual circumstances and needs, none of which can be done at this event. We are not lawyers, accountants, or advisors. Please consult a professional tax advisor, accountant, return preparer when addressing your personal tax matters. Democrats Abroad does not endorse or recommend companies or individuals attending or hosting this event. If you're in need of tax advice, you can consult the IRS Tax Return Preparer Directory to find an advisor or tax return preparer near you, or providing online services that meet your needs and budget. Democrats Abroad accepts no liability for any actions taken or not taken by participants in this event as a result of information obtained at this event, or from a participant choosing a preparer either from the IRS directory or based on something someone said or did at this event. So I think we've covered all of our bases. So we can keep going. And I did see Democrats Abroad Albania had posted a great link about VITA tax services through Cornell University, including those for low-income individuals who are living abroad. So that was a fabulous resource that you guys recently shared. Okay, so I am Arielle Tucker, and like many of you, I am a US expat. I've been personally and professionally exploring cross-border tax and financial planning topics for over 15 years. I own and operate Connected Financial Planning, which is a fee-only financial planning firm. And we say fee-only because we are compensated directly by our clients. We do not sell products. I've written for Bloomberg Tax, and you can find me on numerous outlets, including Forbes, CNN, Yahoo Finance, Consumer Affairs. I also host a weekly podcast for current and aspiring U.S. expats, where we cover lifestyle, tax, and financial planning topics. You can find Passport to Wealth on your favorite podcast platform. So feel free to connect with me on LinkedIn or Facebook, where I engage with the broader expat community on all things taxes, financial planning, and just living abroad as an American. And I'm so happy to be joined by my colleague Otto today. Otto, I'll let you introduce yourself.
Sure. Hello, everyone. My name is Otto Rivera. I am a certified financial planner and enrolled agent with the IRS. And my firm, called Mindful Wealth Planning, is a firm that services U.S. expats in different countries. And we do everything from investment management, financial planning. And I also have a small tax company also called Emergent Tax Services, that specializes also in helping expats. I've been serving, even though I still live in Florida and I'm not an expat myself, I've been serving expats for the last 15 years. First at Charles Schwab and Company, and in the last 7 years as an advisor. So I'm very happy to be here, and I wish you all to be safe and be happy.
Okay, great. So we'll dive right into our agenda. We have got a lot to cover today. And if you do have questions along the way, feel free to put those in the chat, and we're going to be trying to get to those as we go through the presentation, or look at them all at the end. I just did this presentation, or a version of this presentation, on Tuesday for Democrats Abroad in Germany. So we're going to have the basis is the same, right? All the, who needs to file, the important deadlines for this year, a lot of the common issues. You do see I haven't fully updated my presentation because we talk a little bit about German tax. We won't talk about that today, but we will talk about some other issues impacting U.S. expats abroad, including those in Albania. Are you seeing any issues with people getting into the room at all? No, you're good. Okay. So we will keep going. So let's start out with the basics. The US still has citizenship-based taxation, and we don't have residence-based taxation. So if you are a US citizen, you are a US green card holder, or otherwise considered a US tax resident, you likely still need to file a tax return. The actual filing thresholds varies. We'll look at those on the next slide, but the income thresholds are as low as $5 for those who are married filing separately. If you were a US visa holder and you left the US, you'll still need to file a final tax return to show that you've correctly left the US tax system. And I think a really important takeaway here is having to file a tax return does not automatically mean you're going to owe any US tax. So we are just talking about who needs to file a tax return. We're not focusing about are you actually going to owe? Because a lot of Americans filing tax returns abroad don't actually owe additional tax, or they may just owe a little bit of tax. So that's an important thing to understand. Okay, and then on this slide, we're going to see our 2025 minimum income filing thresholds. And what this means is if you've earned at this amount of US dollars, and you'll note that all of these numbers are in US dollars, even though you may be earning euros or a different currency where you are based, your earnings always need to be converted into US dollars to determine if you need to file or not. And every year we see a slight increase in these income filing thresholds. This is just if you earned more, if you're single and you earn more than $15,750, we know you're going to need to file, right? And then, of course, there's some additional considerations if you're 65 or older, and depending on like what your different filing status is. So we've got single, married filing separately, married filing jointly, head of household, and then self-employed. You're probably noticing on this return, why are we talking about 2025? And even though we're in 2026, and this is because I'm focused on the tax return that you're currently filing. So it is currently March 26, 2026. So you are filing your 2025 US tax return right now in the spring of 2026. There are a couple opportunities that I like to point out in this slide. So if you are a US citizen and you're married to a non-US citizen and you live outside of the US and you have dependent children, you may be eligible to take the head of household filing status rather than the married filing separate filing status. So that's something to just be aware of. Ask your professional, prepare about that, and see if it applies to you. The other thing I'd like to point out here is self-employment income, right? I always think really the US is one of the best places in the world to start a business, because if you're living in Europe and you experience European bureaucracy, you know how hard it is to start a business in a lot of places in Europe. And the filing threshold here is if you have more than $400 of net income, so that's the income after expenses, then you also have a filing threshold. So the two really important numbers here that I always like to point out are that married filing separately, which is only $5, and then that self-employment income, which is only $400. Those really low thresholds mean you have to file a tax return. Again, doesn't mean you necessarily owe anything, but you're still going to have to file that tax return. Anything else to add on this slide, Otto?
For those who are filing married filing separately, also one, if you do that kind of filing, you will be Your retirement contributions will be limited. Other benefits of the tax code will be limited. So do consider, if you qualify, if you have children, that change to head of household. It depends on your situation, of course, but it's something to know that you're limited in the US side of what you can claim if you're filing as married, filing separately.
Yeah, that's a great point, Otto. I mean, it is the most punitive filing status that we have. And another thing that I know a lot of, in Europe, a lot of we're also filing our local tax returns right now. I'm in the process of filing my Swiss tax return right now. And so you may file married filing jointly or single or whatever locally. This is just on the US side. And it is possible that maybe you file together in one country and separately in another. So it's just, they don't have to align, but it's definitely something to be thinking about. Okay, there are a lot of important dates on this slide. We don't have to go into detail in all of them. Again, you will be getting the recording so that you can refer back to this slide. I want to just kind of highlight a few important dates here. So if you are living in the US on April 15th, that is your US tax filing deadline. If you are living outside the US, on April 15th, you have an automatic extension, and this year that gets you an extension until June 16th, okay? But the important point here is your tax payment is still due by April 15th, even if you don't file your tax return until June 16th. We're still applying interest from April 15th to June 16th. What we won't apply is an underpayment penalty or like a late filing penalty or anything like that. But if you generally owe, and because I know this is for Albania, tax rates are a little bit lower, we don't have a tax treaty. If you know you owe every year, then it's something to just be prepared to put a check in the mail or go online and make a payment ahead of April 15th. I didn't used to worry about it so much, but interest rates the last 2 years have been so high, right? I think we're at about 7% interest rates right now for the IRS, that I don't want to have to pay interest anymore. When it was like at 2%, it didn't really bother me, but right now I do like to make those payments. And the nice thing is, if you do make an overpayment and you're due a refund, you get the interest back. You get your 7% interest back. So I actually think it's a great thing to consider if you're not sure if you're going to owe. The other thing to note is that October 15th deadline. So a lot of expats are, struggling to finish their resident tax return, their foreign tax return. You want to make sure you have an extension in place by June 15th so that you can have an extension to file until October 15th. That is a fairly easy extension to get. You just have to file, what is it, Form 4868? Yeah, file a form. If you're using an online software, you can do that pretty easily. If you're working with a preparer, they'll file that for you. The bigger one to know is if coming into October, you still realize, I'm not going to file, I'm not going to make that December 15th, I'm not going to make that October 15th deadline. You need to put in a more formal request to receive an extension to file through December 15th. So that's the really important thing to just be aware of. Anything else to add here, Otto?
Well, for extensions, you can also use software. Your tax preparer might be able to, his software most likely supports filing extension. I know mine does. And also, even user software, if you're using some kind of user software, which probably is not the best option for expats, it might, at least for the extension, it will work. But then for the tax return, probably not. But yeah, those are other ways that you can do
Yeah,
it.
and even you can go, if you know you owe a payment, you can always go online and you can make that payment on the irs.gov website. And that actually, if you haven't decided who you're going to file with yet, that could be one of the simplest ways to approach it. Okay, and then just kind of some updates from going from 2025 tax year, and now we're sitting in the 2026 tax year. The nice thing, every year we have the foreign earned income exclusion. It's essentially like inflation adjusted, so it increases a little bit. So in 2025, that exclusion was 130,000, and in 2026, that's 130, over a little over 132,000. The big thing here that I'm seeing with clients, and I work with a lot of clients in the Eurozone or in Swiss francs, that dollar has weakened so much against those currencies that while we have an increase, it doesn't really account for also the currency increase. So if you are earning the same amount in 2024 as you did in 2025, on paper, you may actually, like once we translate that into dollars, it may look like you earned a lot more income. So just something to be aware of. If you're like, oh my gosh, I made the same amount of money. Why does it look like such a bigger number this year? It's because the dollar really weakened in 2025. Of course, we have the foreign housing exclusion. We talked a little bit about IRS interest rates. So for Q1 of this year, they're 7%. They're going to be dropping a bit in Q2 down to about 6%. We see our income tax brackets always are adjusted for inflation as well. The big one here, again, for anyone with children, especially they have to have a U.S. Social Security number, but we do have that refundable child tax credit, which is up to $1,700 per child, and that's for 2025 and 2026. So if you have dependent children who are U.S. citizens and you can get them on your tax return, that is a great way to actually get money back from the IRS, even though you live abroad. And then we also have our gift tax limits and additional considerations here. So if you are married to a non-resident alien, or you're married to a non-U.S. person living outside of the U.S., you can gift that person up to $190,000 in 2025 or $194,000 in 2026. It's just important to know you also need to overlay the foreign considerations. And so if you're looking to kind of reduce the assets that you have in the US tax system, you also need to see, okay, what are the local regulations around gift or inheritance tax issues? Because those can look very different than what we have in the United States. Otto, do you want to run through the IRA contributions changes for 2025 and 2026?
Sure, absolutely. For these retirement contributions, these are traditional IRAs, meaning that they are tax deferred retirement instruments. So you will get a deduction based on your tax percentage, right? Your tax rate. You'll get that savings by contributing to your retirement actively. In 2025, the limit was 7,000, but if you were 50 years old or more, you get $1,000 more that you can contribute. For this year, now 2026, 2,500, and you still get you get this year the 1,100 adjustment over 50. It is a great way to save for retirement if you're a person who's probably temporarily in Europe, for example, Albania and any other country, and you plan to go back to the U.S. to at some point in the future, and you will need some retirement savings. There's a big advantage if you are, for example, working for a local company, or maybe you're working for a company, an American company that does not offer you a retirement plan. You're able to take the deduction and still save for retirement using an IRA, even regardless of your income. So you can be a high earner, but still be able to save for retirement and save in taxes by making traditional IRA contributions. That's a pretty useful tool, and just depends on your circumstances, of course, but certainly it's something that you have in your toolbox to save for retirement and save in taxes in the current year.
Yeah, and one of the reasons we are often talking about the traditional IRA over like a Roth IRA is because most of Europe does not recognize a Roth IRA. So again, if you're like, hey, but I keep hearing about how great a Roth IRA is, It could still make sense for your situation, but again, you need to overlay what are the local tax considerations where you're currently living, and then where are you going to end up? And that's really personal, right? So it's just something to be aware of, that your local country may tax the Roth IRA in a way that the US doesn't. Again, if we're talking about kind of more the Eastern European region, tax rates are a lot lower over there than they are in the rest of Europe. So if you end up owing additional US tax, making these traditional IRA contributions becomes a really powerful way to save US tax while saving for retirement. And that's awesome. The other thing to note is, yeah, we mentioned 2025 IRA contributions because even though we are sitting in 2026, you have until April 15th, 2026 to make those IRA contributions. So you have a couple of weeks to figure out, hey, am I going to owe additional tax? And if I am, maybe I want to squeeze in those IRA contributions. Now, a lot of brokers might not want to work with you. Maybe you can look at Charles Schwab or Interactive Brokers. Those are two big custodians that do support some US expats. So just to kind of give you some tips and tricks there. Okay, we had some major tax reform, Otto, last year, right? With the One Big Beautiful Bill Act. So again, I'll just very quickly highlight this. We no longer have the clean energy vehicle credits. Doesn't really apply if you're not living in the US. Obviously, we have the qualified tips deduction, qualified overtime deduction. Again, probably is not going to apply for you. Same with the adoption credit. Are things that you might be able to take advantage of, but just so you know, we did have some major tax reform. If you have kind of weird things around tips or overtime or adoptions, just be sure to talk to your own tax professional about those things. And then other updates that we've had major defunding of the IRS. I think they lost like 25% of their staff and their budget. So there continues to be a lot of frustration about how the IRS is operating. They're operating on it like kind of like on a skeleton crew, but all the time. So my pro tip, if you have to call the IRS, and I even call the IRS sometimes, don't be scared to call the IRS. Just call them the moment that they open, which is early afternoon in Europe. So that's a huge advantage that we have, is that we can call first thing in the morning. I never call on Mondays. Everyone's trying to get through on Mondays. So I usually like to call between like Tuesday and Thursday, and I can usually get through. I always recommend e-filing. One of the things that I do see in Europe, there are a lot of tax professionals who maybe aren't US persons, and then they're not eligible to operate e-filing for their clients. I think that is just so unfortunate. There are such a backlog with the IRS. You are really not doing yourself a favor if you are not able to e-file. So I would find a preparer where you can e-file, because you don't want your tax return to go and sit in a warehouse for the 6 months. Because even if it's been stamped that it's been received on time, they still need to go and figure out how to process that as a paper return. That takes more time. If there's any notices that go out, those notices are going to come to you automatically, even if you've already sent in all your information. And again, with getting things over to Europe or globally, it just becomes a bit of a nightmare. So I really, really recommend for expats to really make sure you are e-filing, unless you are in one of those very unique situations where you're just not even eligible to e-file. The other thing I always recommend is set up an individual taxpayer account. So you can do that through something like ID.me. We wrote an article on that, so I'll send that over in the follow-up in the resources with the video. I think it's really important that you're able to access your own IRS account, your own US Social Security account. You want to make sure that you understand what's going on in those accounts, that there hasn't been any fraud or anything. Like you should check those accounts at least once a year. Anything else to add, Otto?
No, absolutely true. All that you said. Just if you're going to be distant from the homeland, then do make sure you have electronic access to those, Social Security and your taxes. You really want to have a handle on them and look at them, a few times a year at least, and make sure you're up to basically everything's taken care of. Also, yeah, like Ariel said, call the IRS early in the early afternoon in your case that you're in Eastern Europe, and you'll be fine. And you usually are able to get, I just called 2 days ago. I called at 6 a.m. here, and I was able to get someone within 30 minutes. Sometimes it's even quicker, 15 minutes. So do call early, and you should be able to get someone that can help you and answer your questions.
Yep, absolutely. Okay. Building wealth as an American abroad. I mean, essentially, I think a lot of Americans feel the frustration of basically walking a tightrope of compliance between the country that they live in and then obviously the US. You have restrictions on the US side for what you can buy or how you can access saving and investing and building wealth. And then we also have restrictions on your local side when they find out that you're a US person. I always tell people to make sure you're weighing both the US and whatever resident country you're living in or you're moving to. You got to think about both systems. And you got to think, how do these interact? What are the rules? If I do something on one, is it going to spike my tax liability on the other or create unintended tax consequences that I really don't want to have to deal with that are very expensive? So I find there are some really friendly local tax preparers, meaning non-US, who really want to help you optimize. Oftentimes that can get you in trouble on the US side. So make sure that whoever you're working with on your local return, that they understand you're a US person, you have different considerations, do they have other US clients, to make sure you kind of avoid some of those common pitfalls. The other thing we talk a little bit about IRAs before, in individual retirement accounts. US qualified IRAs, right, from a US perspective, are generally going to be a bit more protected. Private pension accounts, private pensions can be really popular in Europe. It's something that you have to look on a case-by-case basis. Does this private pension work for me? Because oftentimes they can kind of be like an investment wrapper and get you into some ucky investments from a US tax perspective. Foreign real estate also has different considerations, right? Different countries and tax incentivize real estate in different ways. So it's just something to be aware of, that you are still tied to the US system. I'm not trying to scare people away from doing it. You should absolutely, if you're going to be in a country long term and owning real estate is a goal for you, pursue it. Just make sure you don't do it blindly. You understand what are going to be the US considerations here. Again, foreign life insurance products, a lot of times they can also be this wrapper for these really complex investments where, someone's making a big commission, you're not really winning. So go and look at those, be skeptical, take that, document to your tax preparer, your US tax preparer, and understand what are the considerations here. Less than an hour ago, I did a few slides on Albania. So we'll walk through these together just because there are some really interesting things about Albania that I learned today. I'm not an Albania specialist. The first thing that I looked for was, is there a treaty with Albania? And there's not. So in much of Europe, we are lucky enough to have treaties with the US, which can provide some additional tax protection. But when there is no treaty, there is that additional risk for double taxation or different taxation. There is no tiebreaker rules for residency. So again, you have to understand, as a US person, even if you don't live in the US, you are still always a US tax resident, even if you're outside of the US. That's weird. And then you have to look at, with Albania, what are their own rules around when do you establish tax residency? Are you in Albania on any special tax system or tax incentives? And so you kind of really have to understand that. Just be careful with Albania because it does seem to be some lower tax rates. So it may be that you end up really paying more on the US side, because what I read was Albania's rates are relatively low. I think the top rate was about 23%, whereas the US, the federal rate is currently 37%. So it really depends on how much you're earning and where you hit those progressive tax brackets. But just something to be aware of is it seems like we have some misalignment here. I'm just trying to see my notes here if there's anything else I missed. it's very likely, again, that you're going to have more US tax obligations because the rates are so much lower in Albania than they are on the US side. So just kind of be prepared for it. And that's where, those traditional IRAs are starting to optimize on the US side become a little bit more interesting if you're in a low or no tax country. The other thing when we don't have a tax treaty with the US is the potential for the self employment tax trap, because if there's no totalization agreement, and US citizens who are self employed still owe additional self employment tax on the US side. And if you're a resident in Albania or in another country without a totalization agreement, they're probably going to have their own social system, and you're going to end up paying into two systems. Now, the US has a very generous system, and as long as it continues to be around, you'll get something out of that system, but it's just something to be aware of. Other things to always be aware of: when you're filing a US tax return, everything comes back into dollars, right? Regardless of local currency. You're going to have to look at the official rates every year and determine, okay, am I going to owe, basically almost like foreign phantom currency gains because the currency fluctuated. Especially if you own, you sell real estate in a year and there's a currency gain, that can be taxable on the US side, even if it's, it could be a loss in the local currency. So something to just understand and prepare for. Same with if you're holding local stocks or investments, same thing. So we're always having to come back and do our bookkeeping almost twice. We're doing it in the local currency for our local filings, and then of course for our annual US tax filing. Otto, I want you to talk a little bit about the Streamline program, just so people are aware that this program does still exist if they have not been filing tax returns.
Sure. Thank you, Arielle. So basically, if you haven't been filing your taxes for some years, and this does happen to many expats just because, they're out there, they're doing their lives, and, things get in the way, or maybe just because they thought after leaving the US they did not have a requirement. There is a program, it's called the Streamline from Offshore Filing, that will help you get into compliance at a discount, right? And it covers different situations, but most of it is not reporting income. There's programs for not reporting property. For example, if you bought a property and you have been renting it abroad and you haven't been reporting it because you haven't been filing, it accommodates that also. There's all sorts of requirements for the program, but it is definitely a much better option than simply being audited and then being fined by the IRS. Those fines can be thousands of dollars, unfortunately. And it's really important for you to file every year and just try. If you have issues filing for whatever reason locally, do reach out to a tax preparer in the US. There's a lot that will work with you across the seas, so you can file, and they can also help you with the payment also to make sure that that gets to the IRS. But basically, it is really important. It's a complex and bureaucratic program, but if you're in a situation where you need to get into compliance, I'm currently working with a couple of clients with that, for example, and it's a process that will take months, but little by little we collect the information, we put everything in order, then we send it all to the IRS, we make sure that they receive it, and then they'll come back and say, okay, perfect, you're in compliance now, this is how much you owe, in different situations, right? And the amounts vary. It is really important for you to be in compliance. So if you're not currently filing or have not filed for some years, do reach out to a competent tax professional that can help you most likely, go through one of these programs to get into
There's so
compliance.
many great programs here. And I think they really made it easy if you have not been in compliance to come into compliance. It's 3 years of returns, right? We're only going back 3 years, and then the 6 years of FBARs. And FBARs are honestly, if you have a simple situation, that's something that you could probably do on your own. We just launched a course on how to self-prepare your FBAR because it doesn't need to be super complicated. The goal here is, take ownership and learn how you can do this, because until tax laws change, we're kind of stuck with citizenship-based taxation, which brings me right into residence-based taxation for Americans Abroad Act, right? Because right now there is an act right now sitting in the House Ways and Means Committee. Been following that since it landed there in December 2024. I don't know, Bahara, if you have any updates on this, but when we were speaking with Karina on Tuesday, I think it's still sitting there, which honestly, just making it there was such a huge win. This is really bipartisan. I think I saw like a 90% of Americans abroad are hoping for this. And I'm like, why is it in 100% of Americans abroad? I mean, it would in a way be able, like we would almost in a way when you expatriate and you have to file an exit tax and let them know, okay, I'm ending my U.S. tax obligations. There would kind of be, the idea is there's this like more formal process where you say, okay, I'm now going abroad and I'm ending my U.S. tax obligations. I'm really hoping that this happens. And that's the one thing that President Trump talked about as candidate Trump was, can we end citizenship-based taxation? And with all the things that are going on in the world, I'm like, maybe that we'll get this out of it. I don't know. We'll see what happens. But just so you're aware, things are still happening. Things are still moving. You should still be voting and involved in the process and staying engaged. Because again, if you end up in a low tax or a no tax country, you're paying taxes in the US. So it's important to understand what's going on. Other issues that we see a lot of, there are a lot of institutional access issues for US citizens abroad. This slide mentions Germany, but really that extends to most of the European Union as well. So just something to be aware of. There's a lot of FATCA compliance, so not all banks necessarily want to work with you. If they know that you're a US person, there are a lot of passive foreign investment PFIC tax rules if you start to buy foreign investment products. So just something to be aware of as you navigate this process. I still have my submitted questions from our event on Tuesday, so I'll breeze through those, but feel free to put your own questions in the chat. We covered a lot of questions on Tuesday. I want to just quickly touch on FATCA versus the FBAR. Everyone needs to file, most Americans abroad have an FBAR filing requirement. That is a separate filing from your tax return. So your tax return goes to the IRS, and then the FBAR goes to the Treasury. So it's kind of like similar information. You're providing your bank account information, where your assets are held, who are they held with, so are they held as an individual account or a joint account? Do you have access to foreign accounts? It's a lot of informational reporting. So for FATCA, for Form 8938, something that you would file on your tax return, the thresholds are pretty high if you're living abroad. You have to be abroad on the last day of the year. Otherwise, it's a significantly lower, but that is anywhere between $200,000 and $600,000 that you would have a FATCA requirement. And if you're getting close to retirement, it's pretty easy to end up with a lot of funds in a foreign pension or something and trigger a FATCA requirement. We just ran an FBAR self-preparation worksheet. If you want to learn how to self-prepare your own FBAR, feel free to learn more about this. I'm really passionate on making sure we can save Americans abroad on tax prep fees, and just getting educated and learning how to do things yourself is a great way to start. And then feel free to follow me on Instagram. Again, I have a weekly podcast. It talks all about taxes and finances and just building life abroad. And that's our Passport to Wealth podcast. And I hope you'll continue to follow us along. So Are there any questions before we go?
There are some questions in the chat. So let's see here. Up to what age for the dependent children? So child tax credit is up under 17 for the child tax credit. Now there's another credit that you can request after that age. It's the other dependent credit. And that's a lower credit.
And it's
But
not refundable. The big one is that refundable child tax credit. That is what I'm seeing in everyone's tax returns right now. And the big thing to know there also is you can't take the foreign earned income exclusion and get the refundable child tax credit. You have to take the foreign tax credit. And that's something, if you are living in a no or low tax country, you kind of have to weigh, okay, am I going to have a big tax liability because I have no foreign tax credits or very low foreign tax credits? Maybe then I have to take my foreign earned income exclusion. So it's something that I like to do like a side-by-side analysis of every year, but just know once you switch, you're kind of stuck with your choice for 5 years. You can't switch every year. So that's kind of a planning conversation. A lot of good tax softwares, a good tax professional, they're going to run you through side by side what's the most optimized position for you, especially if you have those dependent children.
Next question here, it says, is the IRS international section funded? That's a question, right? For several years, they could tell you could tell they were calling from abroad, route you, and then you will get an automatic message from Congress saying that Congress didn't fund them, and then they will click on you.
I don't know the answer to that question.
I
I actually called the international number within the last 2 months, and I did not get that message. So I don't know if that had something to do with the shutdown or something. I don't know if you know about this, but
No.
I don't know. I'm sorry.
No, I don't either.
The next question is the FATCA form going to Treasury, the one on the bank in your country has to fill out, or another? So FATCA is U.S. reporting, and it's the report of those holdings that you have.
Yeah, so bank accounts, foreign brokerage accounts. This is not reporting U.S. information on there. They already know what you have in the U.S. This is all of those foreign accounts. Now, depending on which country you're in, the U.S. may have agreements with that foreign country to already share this information. They're already sharing this, and they're just giving you the opportunity to self-report what you have, and it is your job to stay in compliance. And the threshold is low for FATCA. FATCA is the 8938. The FBAR is only $10,000. So it's two different things. So FATCA has a bit of a higher threshold. You can have a couple $100,000 in the bank before you trigger that FATCA filing requirement. But if you're in a country where they have an agreement with the U.S., even if you have less than that, they're already sharing information. They already know you're a U.S. person. We work with a lot of bank compliance teams, and they know. They're asking. They've gotten so much smarter since FATCA blew up about 15, 20 years ago, and now they're asking, where were you born? Where were your parents born? They're looking for those, any factor where it could trigger that you are a U.S. If I use TurboTax, is the FBAR getting filed? I don't know. I have no idea. It depends on what you sign up with, right? So TurboTax, I think that maybe they have some free and some low cost offerings. If you're doing the free or low cost offering, that might not include your FBAR filing. And so again, it's two separate filings. It goes to two separate places. It's really easy to learn how to do it on your own. If you're looking to save on tax compliance fees, do it on your own. We just did the presentation today on how to self-prepare your FBAR. And so shameless plug for that. Sign up for that. We're charging $49.99 to do that course, and we'll send you the replay, because I really developed that because I hate watching people pay $500 to prepare their FBAR.
So Okay, so Erin asks, okay, so yeah, example, the bank tells me I have to file some form from the US government along with local forms agreeing that if requested, US government can access my bank account. Well, I wouldn't, we wouldn't know about the access, right? What we want to make sure is that you do know that if, for both FATCA and FBAR, if you do have a requirement, if you have assets above the thresholds, it is your job to be in compliance and report.
I've seen the same in Kuwait as well. They ask us to file, obviously, the FATCA, and then I think now they're issuing W-9s, 8s, one of the two. The bank gives you that here, but that's probably because Kuwait and the U.S. have that agreement, as Arielle was talking about before.
Yeah, W-9s will be requested from institutions when they want to certify your social security number or your tax ID in the US. So that is something that would be common from institutions just to make sure that they have the correct information and that they can report it correctly.
Okay, I think there's another question.
So it's the large FATCA threshold new. I used to have to sign form, but the bank has not called me in several years.
No, it's not. So it's two things. Your bank is likely, once they realize you're a US person, they're going to have you sign some form that says, are you in compliance, right? They don't want to get in trouble for you not being in compliance. They don't want to get sued and say, oh my God, we're helping Americans abroad hide all this money, right? So it's like two things. Your bank, even if you only have 10,000 or 5,000, dollars, whatever, in that account, they're still going to be asking that. When you open up a new bank account, when you don't have any money in that, they're going to be asking you, are you in tax compliance? Can you self-confirm that? Separately, we have FATCA and FBAR, which is self-reporting. And those have the different thresholds. So it's a couple different things going on.
Hey, any other questions?
I don't see any other questions. Thank you guys so much for doing this. I really appreciate it. Is there a way, I don't know if maybe if you can put up the slide with your contact information again, Arielle, if you don't mind, before you guys head out.
Let me see how to move my slides again. I just sent it to my Passport to Wealth Instagram because that's the best way to stay up with what we're doing. I think probably this audience in this region is going to benefit most from our weekly podcast where we talk just more generally about different tax things that are going on. And then, Otto, I realized I didn't have a slide with your contact, but I will go back to our first slide so that people can just grab a screenshot of your firm name. So Otto is with Mindful Wealth, planning firm, and then he also runs Emergent Tax. And again, we'll send out an email with the replay probably tomorrow. I'll send it over to you. And I'll put Otto's email as well in that email so that people can find us if they have more questions. Anyways, this is always fun. It was super easy for me to jump in and do this because I literally just did this 2 days ago for DA Germany. So it was
but thank you for doing this last minute. We're so grateful because a lot of people, I think, wanted to get some information before they filed. So we really, really appreciate it. Thank you, Arielle. Thank you, Otto. Really can't thank you enough for doing this so last minute. Really appreciate it.
Okay. So I'm going to stop the recording now.